Cryptocurrencies have seen a resurgence in the start of 2023, with Bitcoin posting its largest weekly gain in over 9 months. This has caused investors to consider whether 2023 will be a good year for crypto, amidst a difficult market in 2022. The global markets have seen a decrease in speculative investments due to central bank moves to raise interest rates and tighten policies. This has led to a downturn in crypto markets and a loss of trust in the crypto market as a whole. The US economic data has suggested a possible slowing of inflation, which may lead to a rebound in BTC and other digital assets. There is no guarantee of what the future holds, but some factors point towards 2023 being a better year for digital assets than 2022. Rocket Pool, GMX, and Frax Finance are all cryptocurrencies worth keeping an eye on in the year ahead. Research is key when investing in crypto assets, and it is important to remember that they remain highly volatile and speculative. Cryptocurrency markets have been on a wild ride in the past few years, with drastic declines in the bear market of 2022 followed by a strong start to 2023. Investors are now asking whether 2023 will be a good year for crypto, and the answer is, as with any investment, it's hard to tell. Investors should do their own research and come to their own conclusions about what investments are best for them. However, there are a few key trends to watch out for in 2023, such as the increasing adoption of digital currencies, the upcoming halving in 2024, and the US economic data which suggests a potential slowdown in inflation. With these trends in mind, and a portfolio diversified across different asset classes, digital asset investors may be in for a good year in 2023. Bitcoin has surged 40% in January, clearing a key resistance level and pushing analysts to anticipate higher valuations last seen in mid-2022. The climb has occurred despite lingering concerns about the FTX bankruptcy, and has flipped the former resistance of $21,000 into support. Analysts remain neutral in the short term. The weekly chart MACD histogram is showing improving bullish momentum and the stochastic indicator is overbought. The potential move toward $25,000 depends on the performance of traditional risk assets. These assets have been boosted by easing recession fears and a less aggressive Federal Reserve. This article looks at the recent price rally of Bitcoin and the significance of the $21,000 resistance level, as well as the effect of traditional risk assets on the potential rally towards $25,000. It also provides insight into the MACD histogram, an indicator used to gauge trend strength and changes, and the overbought reading on the stochastic indicator. Ethereum is seeing signs of exhaustion in its rally against Bitcoin, and is in danger of breaking below a key technical support level. The ETH-BTC pair has declined nearly 9.25% since its local top on January 11. Bitcoin has slightly outperformed Ether in USD terms since the start of the year. If the ETH-BTC pair breaks below the EMA ribbon range, it could decline by over 20% from current levels. It could then test a key downside target near 0.0550 BTC. This analysis clearly outlines the potential risks and rewards of Ether's current rally against Bitcoin. It also points out the potential for a large drop in the ETH-BTC pair if it breaks below the EMA ribbon range. Investors should be aware of this possibility and consider all available data before making their decisions. John Deaton, a ProRipple lawyer, has provided further evidence that the XRP coin is not a security. He noted that it is used to transfer value, pay salaries, and accept it as payment for goods. Thousands of holders use it as a substitute for cash. All of this implies that the Howey test is unlikely to be satisfied and thus XRP's label of security is unfounded. John Deaton's strong evidence adds further weight to Ripple's argument and puts the SEC in an increasingly difficult position. Bitcoin bulls have an important new price target to meet, $25,000. This is a critical price level as it is where bears begin to get liquidated en masse. It is also the site of Bitcoin's 200-week moving average, which has been absent from the chart since the middle of 2022. Leveraged short positions will start seeing liquidations once BTC USD passes $23,400. This is where the current rally has encountered momentum problems. The summer highs also present a resistance zone on longer timeframes and Bitcoin needs to break through this resistance in order to continue rising. Some consolidation may take place before there is a break to either side of the range, and a trip below the range low is not out of the question. This analysis of Bitcoin's price point by Philip Swift and Rect Capital offers an interesting look at the potential for Bitcoin's price to reach $25,000 and the possibility of a dip below the range low. It's a reminder of the importance of watching the market closely, as well as the need to identify the key levels and trend lines to watch in order to make informed trading decisions. Bitcoin Loophole is a platform that uses artificial intelligence to facilitate cryptocurrency trading. It offers a risk-free experience, with a free sign-up process, zero commission fees and a minimum deposit of $250. It supports 14 different digital assets and provides strategic recommendations based on fundamental, technical and sentimental analysis. Furthermore, it has a high trade win rate and 24/7 customer support. Bitcoin Loophole has become a market leader in the crypto trading industry due to its ability to solve fundamental problems in the Web3 world. It also has the ability to provide users with sustainable value and upside. This platform is a great opportunity for users to take advantage of the lucrative crypto market. With its automated trading bots and AI-enabled algorithms, users can make informed decisions and maximize their profits. The low minimum investment and risk-free environment make it a great option for beginners and advanced traders alike. Aave is voting to execute its third iteration, or V3, on the Ethereum blockchain. The goal of this execution is to improve user experience, risk management and capital efficiency. The vote is ongoing, and if it passes, the deployment will occur on Friday, January 27th. The new iteration will include features such as Efficiency Mode, or E-Mode. It will only include pre-approved assets such as WBTC, VETH, STITH, USDC, DAI, Link and Aave. Isolation Mode, however, will not be enabled for all assets when Aave V3 launches on Ethereum. This change is being hailed by other Ethereum DeFi players who plug into Aave's protocol for liquidity. It is a big step forward for the entire Ethereum DeFi space. Aave's V3 is a major upgrade that is being welcomed by the DeFi community, as it offers improved user experience, risk management and capital efficiency. With the vote coming to a close, the protocol's deployment is set to execute on January 27th, bringing the new features of Aave V3 to Ethereum, including efficiency mode and interest rate models. However, some features such as isolation mode will be limited when V3 launches on Ethereum. Bitcoin rose 0.4% in the past 24 hours and is currently trading at $23,000. The total volume of Bitcoin options on Deribit reached $4.25 billion last week, the highest point since early November. Equities closed mixed. The Dow Jones Industrial Average was up 0.31%. The S&P 500 and the tech-heavy Nasdaq Composite were down 0.07% and 0.27%, respectively. Binance mistakenly kept collateral for some of its crypto assets in the same wallet as customer funds. Ether slid 0.8% to trade at $1,615. Over the past 7 days, nearly 1/4 of ETH has been burned stemming from non-fungible token trades. The Wormhole network exploiter that stole 80,000 ETH last year reappeared this week, exchanging 95,360 ETH worth roughly $157 million. 3 crypto tokens, AXS, DDX and APT, all showed signs of strength leading up to token unlocks. Bitcoin has seen a steady trend of growth in the past week, with an increase of 0.4% over the 24-hour period. Ether has seen a slight decrease at 0.8%, however, tokens such as Axie Infinity, DAI and Aptoche have seen significant increases in value due to token unlocks. BTC's chart is showing new support levels forming near $22,900 with increasing activity and price agreement at this mark, indicating the market perceives the asset as fairly priced. Ether saw a 16% rally between January 14th and January 21st, peaking at $1,680 before facing a 5.4% rejection. Despite the repeated corrections that followed retests of the $1,680 resistance, it is up 35.5% year to date. Negative news flow has not affected investors' sentiment. Ethereum developers have created a testing environment for an upcoming network upgrade. Derivatives traders have shifted to a neutral sentiment, indicating that the odds favor Ether bulls. This article provides a great overview of the current market sentiment of Ether. It looks at the recent price rally, the reaction of traders and investors, and the data from derivatives markets to provide insight into how traders are feeling about the cryptocurrency. Additionally, the article provides helpful context and analysis to help readers understand the current market situation. Wasabi Wallet has launched a global treasure hunt entitled Hunting Sats. It is a gamified educational bootcamp to help teach users how to best protect their private keys. The wallet has been funded with 0.034548811 BTC. Participants must correctly guess the wallet's passphrase and 12-word seed phrase in order to claim the funds. Brute forcing is a method of randomly guessing passwords or passphrases to gain unauthorized access. 12 partners, including prominent Bitcoin companies, will reveal their secret words over the course of the game to make brute forcing easier. The game aims to teach users about seed phrase security and the benefits of self-custody. This challenge is an innovative way to teach users best practices for private key protection. It is also a great opportunity to learn more about seed phrase security and the importance of self-custody. This global treasure hunt is a fun and educational way to promote awareness and understanding of Bitcoin. Bitcoin and Ether have taken a pause after their strong start to the year, trading at levels last seen in August and November, respectively. Analysis suggests that new support levels for Bitcoin are forming near $22,900, with increasing activity and price agreement. Inflows of crypto investment products last week were largely directed to short investment products. This indicates that U.S. investors may think the asset is overpriced. However, some investors may be allocating to short funds to hedge their current long positions. This analysis by Glenn Williams is an interesting look into the current state of the crypto market. It is evident that the market is taking a breather after the strong start to the year, with Bitcoin and Ether trading near levels last seen in August and November respectively. The analysis also highlights the importance of high-volume nodes in determining the price agreement of an asset. Additionally, the report by CoinShares showing an influx of short investment products may suggest that U.S. investors believe Bitcoin is overpriced. However, it is also possible that holders are simply allocating to short funds to hedge their current long positions. Ethereum is expected to experience a year of significant developments in 2023, including a hard fork known as Shanghai. This will enable staking and increase liquidity of the digital currency, as well as the implementation of the Scourge phase to address censorship within the network. Additionally, Vitalik Buterin, co-founder of Ethereum, has proposed the implementation of a stealth address system. He has also proposed the use of ZK snarks to enhance transactional privacy and security on the cryptocurrency network. These technologies provide users with the ability to keep their transactions and personal information confidential. They also protect users from fraud and cyber attacks. Overall, the development of privacy technologies for Ethereum can provide investors with the assurance that their transactions, balances, and personal information are protected and secure. The implementation of these features can provide Ethereum users with greater control over their financial privacy. Blockstream, a crypto infrastructure company, has raised $125 million to expand its Bitcoin mining hosting services. Hosting is a service that data centers provide to crypto miners so they can store their rigs to mine digital assets. Capital markets have been essentially inaccessible for many miners. Hosting has become a popular way to earn Bitcoin rewards without having to sink a lot of money into building out infrastructure. Blockstream has over 500 megawatts of power capacity underway for its mining services. It is also the developer of decentralized market technology Liquid Network. The company plans to expand its renewable energy mining products and continue developing its own Bitcoin mining machine. It also plans to reduce risk for institutional miners. This round of financing for Blockstream is a testament to the company's resilience and its commitment to expanding its Bitcoin mining hosting services. It will be interesting to see what other initiatives Blockstream takes on with the new capital, such as its renewable energy mining products and its own Bitcoin mining machine.